Hey guys, this is Nick from forexnoobs.com with a live trade video. You're looking at a New Zealand USD daily chart, and I'm looking at going long on New Zealand USD right now. Usually before I do one of these live trade videos, I explain why I'm going to enter the trade, but this trade has already triggered and it's fallen back down now a little bit below my entry point, which I haven't entered yet, but below my planned entry point. So basically, what's happening right now is if I get in, I'll have a better entry than I had originally planned, which is obviously quite appealing. So before I explain why I'm entering, I'm just going to quickly enter this trade. See, I wanted to enter around about 0.7014, but I'm getting in now at 0.709. I'm getting in 5 pips early. I mean, why not? Now, actually, give me a second. I'm going to quickly set up my stop loss, and then I'll explain why I'm entering this trade and exactly why my stop loss is where it is, why my target's where it is, and all that cool stuff. So just give me a quick second here, because when you enter a trade, you kind of have to put your stop loss in right away, you know, in case price turns around very quickly and surprises you. So you need to do that. You need to do that pretty quickly. Ideally, you do it as you enter, but things get a little messy with live trade videos and all. So, the cool thing about TradingView is you could just copy and paste everything over, which is quite nice. All right. I'm going to adjust those a little bit later, but right now I've just pasted over everything. Now, if you're wondering why you can't see this actual setup on my chart, you saw me take the trade, but you're not seeing it appear on my chart as a line. That's because I'm using TradingView for my charting. TradingView is a charting platform. It does have some trading functionality, but it is primarily a charting platform, and I only use it for its charting functionality. My trading platform is a separate platform, and it is not linked to TradingView. So you won't see the chart pop up on my screen, but yeah, I've taken it on a separate platform that's on my other screen, just so you guys understand that. Now, anyway, let me explain why I've entered this trade and how I plan for it to work out, or how I hope for it to work out, because I can't really plan what price is going to do, but I'm predicting price is going to start to move up over the next few days. So this could go into Monday next week, Tuesday, Wednesday, who knows. But let me explain why I'm entering this trade. So basically what we have here is a nice strong bearish preceding trend. So we see sellers have been pushing down for quite some time. Now they hit the support area and they bounced away. They came back down and they're hitting it again, and they seem to be bouncing away again. So why do they seem to be bouncing away again? You know, how am I telling that they're bouncing away again? Well, it's pretty clear from this candle here. This candle here is an indecision candle. This candle indicates that sellers are really, really struggling at the support area and that buyers are taking control of price. When the next candle comes along, which was this one, when the next candle came along, which was this one, pushed up, made a new high above the high of the previous candle, that was an indication to me that buyers have now taken control of price. Now, I'm entering this trade, and my plan is to get out around about here for a 1 to 2 risk to reward ratio, but my minimum risk to reward ratio is actually a little bit less than that. My minimum is 1 to 5. Now, 1 to 5 is pretty much the standard minimum I use. Overall, I try to go for 2 or above when possible, but as a minimum, I go for a 1 to 5 risk to reward ratio. Now, the reason I've entered this trade is because at its first hurdle, so when you enter a trade, you always look to the left. When you look to the left, you'll see price getting stuck here. So price is got stuck here. So when it came down, bounced away, got stuck, and also got stuck when it bounced there. So this is a potential problem area for this trade. Essentially, if price comes to here it could struggle around about that spot. So if I notice price is struggling in this area, so when price reaches here, if I notice this is struggling, I will consider exiting with a risk to reward ratio of 1.5. Now that's my minimum risk to reward ratio. So my minimum risk to reward ratio is at the first point where price might struggle. But my actual target, my actual risk to reward ratio is 2. And that's at the second point price might struggle, which is the resistance area. Now this resistance area is an area where sellers are. And if price approaches this area, it's possible that it's going to get turned around by sellers. That's why I have my target there. Now, depending on how price moves, I might extend that target. We'll just see how that plays out. Okay, time for a trade update. As you can see, this trade's going quite well. Let's zoom in a little bit. We have buyers taking control of price. They've pushed up. They've approached this problem area that I discussed at the start of this video. So they've come close to here and they've pulled back a little bit, but overall, it's still looking quite strong. Buyers are in firm control of price. Let's drop down to the 12-hour real quick. You can see on the 12-hour, we've got one big bullish candle. Price has pulled back, and now this current candle is moving up. If this candle makes a new high, that would obviously be a good sign. And I'd be pretty confident upon that new high that price is going to at least push up to my 1.5 target. So we'll see how that goes, and I'll keep you updated as the trade progresses. Okay, time for another quick update to this trade. It is now Monday morning, 1:43 a.m. here in the UK. So this trade was obviously held over the weekend, and it is still going really well. At market open on Sunday, so just a few hours ago really, so at market open a few hours ago, price did spike down a little bit, spiked down to about here, we can see from the lower wick, but that was nothing to be concerned about. As soon as it spiked down, it turned around and it started pushing up, and now it is still moving up. The number to watch out for right now is Friday's high. So the high of the Friday candle was at the 0.7062. If price manages to get above that high, to around about the 0.7065, something like that, even maybe a little bit higher. If price gets above that high and holds that high, that would indicate that buyers have taken control of price, or they're still in control of price because they're making a higher high. And it would be a pretty good sign for this trade. It wouldn't really take much for buyers to then push up and hit my minimum target, which is here. Now my minimum target is 1.5. I'm not going to close out immediately if it reaches that target. I'm going to watch and see what happens. Now, the reason I'm going to do this is because of this problem area. I already discussed this slightly at the start of the video, just a little bit, but let's go into more detail about this problem area. Whenever you enter a trade, the first thing you do is look to the left and you identify problem areas. So when I entered this trade, I looked to the left and I identified this area as a problem area. Now this area is quite an obvious problem area. If you look here, we see a bounce. Then you look here and we see a bounce. So that's two bounces. But also, if you look on its way down, see these two little wick bounces here? That's also significant. And then we look at this candle, see how price spiked down, but it just couldn't hold that low beyond this area, and it came back up. And then after that, buyers took control and pushed up before it continued down. So those are all signs that there's definitely going to be trouble in this area. Well, not definitely, but there's a huge potential for trouble at this area. And we did see that on Friday. I mean, it did spike up to here and pull back down. And now today, it seems to be trying to test that area again. So what would prompt an early exit for me, or at least an exit at my minimum target of 1.5, would be if price stalls in this area for a significant amount of time. Then I would look to exit at my minimum. Or if I just see signs that price is stalling and I don't really have faith in buyers at breaking through that area. So we'll get to that if it happens. If it happens, I'll let you know what I'm thinking. But other than that, I'm just going to update as this trade progresses. But I'm pretty confident with this trade right now. Looks like buyers are in firm control of price. I just want to see them push up, break that high, and hold that move above the high. Then I'm pretty sure I'm going to hit my minimum target at the very least. But I'm still hoping to hit my actual target, which is around about here, risk reward ratio of about 2. So we'll just see how this one plays out. Just another quick update to this trade. I only done my previous update about 10-15 minutes ago, but as you can now see, price has broken above Friday's high, and pretty much as soon as it broke above it, it stalled for a little bit, came back down, and then it started pushing up. And now it's fast approaching that 1.5 risk reward ratio, that minimum target I have. Now, I'm shooting this part of the video because I wanted to talk a little bit about what you do in a situation like this if you have a busy schedule. And what do I mean by that? Well, personally, I don't have anywhere to be tomorrow morning, so I can let this trade run because I can check in on it regularly. But, you know, let's say that you're a busy person, or you just have a normal full-time job and you have to wake up at 7 a.m., get to work. You might not have time to monitor this trade. If you were looking at this trade right now, if you were in my position right now, it's already 2 a.m. You need to wake up at 7, 8. So you're already cutting into your sleeping time, presumably. And, you know, you want to close this trade out with profit. You don't have the possibility of sitting there monitoring it. Even with your phone, you know, you need to sleep, then you wake up, you have to have breakfast, have a shower, all that stuff. So you don't actually have time to sit around and monitor this trade. You might be able to check in when you wake up a little bit, but you don't have time to actually monitor it. Now, the thing about trading is it's always going to be easier if you are there to monitor your trade. There's always potential to make more profit if you're there to monitor your trade. But the thing is that 1.5 is the minimum target. So you should be happy with your minimum target. If your trade hits that 1.5 risk to reward ratio and you hit your minimum target, that is something to be happy about. You've got out with profit on a trade. And as long as you're able to get out with profit on, let's say, 60% of your trades with a risk to reward ratio at a minimum of 1.5, then you are going to be a profitable trader. Remember, that is a minimum risk to reward ratio, right? You know, on average, you want your risk to reward ratio to be at least 2. So the minimum is 1.5. So my point is that you can actually consider exiting this trade at the 1.5. So you can set your target at the 1.5, go to sleep, and in the morning, you're probably going to wake up to a profitable trade because it is, buyers are in strong control right now, and it's only a few more pips until they hit that 1.5. Now, personally, I'm not going to close out this trade right now. I'm going to leave it open. I just want to monitor it and see what happens over the next few hours. I just want to see how it develops, essentially. But my point is, if you're a busy person, there are going to be times when you have to make sacrifices. And this is one of those trades where, you know, that might be the case because it's already quite late, 2 a.m. in the morning, and it's approaching target. At this point, if you're busy, you may as well just set your target at 1.5 and go to sleep. Okay, so here is the final update to this trade. As you can see, my target has been hit. Risk reward ratio of 2. It was hit overnight. It was closed out automatically while I slept. I always love that, waking up to a profitable trade in the morning. So this trade worked out really, really well. As you can see, as soon as my target was hit, it turned around and rushed away. Now, this was not that tough to anticipate. This end result was not that tough to anticipate because, like I've been saying from the start of this trade, we had this area here, this scary area. Now, the smart thing would have even possibly been to exit this trade earlier. I did take on a little bit more risk than I'm accustomed to by going for that risk to reward ratio of 1 to 2, but I did it because I saw the potential with this trade. But that was a little bit riskier than I usually am. Like, I tend not to mess around too much with these minor support resistance areas, especially ones that have proven to be strong very recently. See this bounce here. So, you know, I did take on a little bit more risk this time, but it did work out quite well. It was a very calculated risk, and it did work out in my favor. But either way, it doesn't really matter because this trade, it had two options. You could have set your target at a risk reward ratio of 2, or you could have set it at 1.5 because that's the minimum. So 1.5 is still acceptable. Either way, this was a good trade and this was an acceptable trade. So I hope you found this video useful, and thank you for watching.